We think the IPO pipeline in Australia is starting to evolve. It's been quite meagre over the last year or two. Normally, when you're a decade into a recovery in an equity market, you see significantly higher numbers of IPOs than what we're seeing. I think last year was only like 111. Normally, you'd see 300. So we think that over the next year or two, the IPO pipeline will start to improve, and that's a really important area for us to invest in. IPOs tend to be smaller. IPOs tend to be companies that are pursuing equity to grow their business, and typically we'd like to find 5 to 10 a year. That would be our ideal landscape. And we were fortunate to find one just recently. Prime West, which is a property group, came to the market last month, and we were fortunate enough to be able to invest alongside the founders with that. And this is a business that we're really happy to invest in for the longer haul. We don't have a lot of exposure to property, and when we met the founders, we were really impressed. They've been in business for a number of years, and they've grown their fund management business to around $4 billion. And it's quite an eclectic portfolio, which is what we like. It's a really active portfolio, and it's got a good spectrum of exposures. We've got confidence in the business model. We're very happy with the valuation. It's cheaper than Goodman Group, and it's way cheaper than Charter Hall, by way of example. And we believe that at that FUM level, $4 billion, we think they can grow comfortably. They've delivered 15% growth in FUM over the last 5 or 6 years. We think they can sustain that for the next cycle. So that's an example of an IPO that we did the work on. We met the founders. We really liked what they were talking about, and we were fortunate that the promoting broker, being Moelis, gave us a reasonable allocation. So it's a company we're quite confident in. We've spoken about JB Hi-Fi in the past with Livewire, and I think the stock's put on about 30% since then. It's a great business model. They are best of class, and they just consistently seem to understand what is required. It's still a top 10 position for K2, although it's done really, really well. So we've still got confidence in the management team. We've still got confidence in the business model. The PE is around 16 times, and with their most recent update, they actually said that same-store sales growth is still north of 3%. Now, there's a lot of pessimism still around retail sales in the backdrop. We're not as bearish. We believe that retail sales in Australia will gradually improve. But JB Hi-Fi has just shown their pedigree time and time again. They've guided to stronger sales in 2020. So for us, it's still a top 10 position. We still really like the business. They're still generating 20% plus return on equities. For us, we're happy to remain positioned in that stock. Within the space, it is quite hard. Not everybody's doing well. We have initiated a position in Super Retail Group. It's not a big position just yet. It's way cheaper than JB Hi-Fi. Its financial metrics are probably not as good, but we think that the backdrop for retail sales over the next year or so is going to improve. So that's a stock that we've initiated a holding in, and hopefully we'll grow into that as the year folds out.